Hello everyone, it is 2 o'clock and we're going to go ahead and get started. We do have a few people who are just dropping in. Don't worry, this presentation will be recorded and available on our website, and we will also email it to all attendees and anyone who registered. So today we're going to talk about safeguarding your cash and contributions, preventing misappropriation of nonprofits for nonprofits. I am Christy. I am a client success specialist here with Tax 990. If you've called in recently, you may have spoken with me. If you're new here, I hope to be able to speak with you one day. So before we begin, although we try our very best to provide you with as much information on the Form 990 series as possible, please note we are not tax advisors and we will not be giving tax advice. We will only discuss the IRS's e-file requirements and the process of e-filing. The purpose of this webinar is to provide suggestions and education purposes only, to give you some tips for trying to do the best for your nonprofit as possible. Safeguarding your cash and contributions and preventing misappropriation for nonprofits. Thank you for joining me today. We're here just to talk about something that every nonprofit, no matter how small or large, must take seriously, and that's protecting your cash and contributions. Today's presentation, Safeguarding Your Cash and Contributions, we will provide some insight and tools you need to help protect your mission from the risk of fraud or theft. On the agenda today, we're going to equip nonprofit leaders and financial staff, board members with practical knowledge and tools and some strategies to detect, prevent, and respond to misappropriation of funds, ultimately strengthening the integrity and trustworthiness of your organization. So with that said, why does this matter? Because the high cost of misappropriation, whether it is monetary or reputational, can damage your organization. Let's start with the why. So according to the Association of Certified Fraud Examiners, ACFE for shorts, their 2022 report, over a third of nonprofits globally, not just in the US, have experienced some form of fraud. The median loss is $76,000, and some cases have topped into the millions. That's money meant for your programs and outreach and services. Over 33% of nonprofits report experiencing some type of fraud. Again, it is based on about $76,000. It can reach over to $1 million. And the consequences of this can be damaging to your organizations, not only for monetary reasons, but your reputation. If nobody believes in your mission anymore, they're not going to donate to you. So that's the fallout. Over half of the donors reduce or stop giving after a fraud incident. Organizations face legal exposure, loss of reputation, and the kind of morale crash that takes years to rebuild. In total, the sector is losing over $5.8 billion a year to fraud. The consequences can include legal issues, IRS penalties, or criminal charges if it's an insider who's committed the theft. We spoke a little bit about the reputational damage that can take years to rebuild, staff morale and retention decline. So yes, this matters deeply. Common types of misappropriation and understanding the risk. Now let's break this down. The kinds of fraud nonprofits typically face. One of the simplest is scheming cash. That means like when someone pockets cash donations before they're recorded. Then there's check tampering. Someone can either forge, alter, or issue unauthorized checks, where a trusted staff member has a lot of control. We'll speak a little bit more on how to prevent that. And then false expense reports, employees claiming that personal expenses or inflated expenses. So let's say that they went out and had a dinner with the board meeting after the board meeting for, you know, whatever purposes, and it was organizational related. It was $150 and they reported $250 and they pocketed the rest. Okay. Grant misappropriation, misusing restricted or program specific funds. And then it can get into payroll fraud, from ghost employees, which are made up employees, especially volunteers, which, you know, can be easily issued a 1099. Misreported hours. You reported that you worked more hours than you actually did, or unauthorized raises. It is very important that you always double check these things. Expense fraud is common, and staff may submit inflated or fake expenses. Others may misuse restricted funds for non-approved purposes. So these just are theoretical risks. These aren't just theoretical risks. These are real cases seen every year. High risk areas in nonprofit, where the problem starts. So where does it start? Where do the risks start? Think about your most vulnerable points. Event collection, mailed in checks, or online donations that aren't properly tracked. So we'll talk about some of these points. Donation collection points. In-person events. Is there a two-buddy system when the money is handed off? Is there a check system in place to make sure that the money that $50 that was handed to you in cash went into that was it recorded? Was it put in the drawer? Mailed in checks, online donations, all are at risk for being misappropriated. Mailed in checks could be either altered or cashed and then the money pocketed. It's very critical that you track all of these. Petty cash and reimbursement. It has minimal documentation, your petty cash drawer. A lot of companies have a safe box that just has cash in it, and you can just go in there and get it, and no one is going to be the wiser because it's not regulated. Petty cash reimbursements often handled with minimal oversight. What is HR and payroll doing, especially at small organizations? The same person may handle everything from onboarding to payments. So we need to put in steps in place. Payroll is another inadequate oversight area. What are the backgrounds in place? Does someone that you hired have a history of criminal theft? Things like this need to be put into place so that you can check on it. And then financial reporting. Lack of audits is probably the #1 reason a lot of this stuff slips through the cracks. An audit must be in place, either by a manual system or a single person control. There should be somebody there to check what's going on. So what are some of the warning signs, red flags to watch out for? What are the signs that something may be going on? Be alert to accounting anomalies, constant delays in reconciliation, or missing receipts. Does a staff member resist taking leave or insist on doing everything themselves? Even lifestyle clues like luxury purchases or traveling a lot or unexplained income can point to something deeper. And repeated payments to the same vendor. That doesn't seem like a large issue, but is the vendor valid? You know, you got to check out these vendors as well. So that's worth reviewing. Frequent accounting anomalies, delays in bank reconciliations, missing receipts or poor expense documentation, staff who resist sharing responsibilities or taking leave, lifestyles not matching reported income, and repetitive or inflated payments to the same vendor are all crucial red flags. So how do we put in place some steps or essential controls to prevent this? Here's your first line of defense. Internal controls. Start with segregation of duties. Never let one person authorize, record, and control the cash. Use dual signatures on checks and transfers. Have monthly reconciliations. Independently verify financial reports. Along with having two-party people, have a third person or outside organization do independent financial record checks and reconciliations. And receipts and approval policies. Enforce strict rules for documentations and supervisor sign-offs. Digital donation tracking. Use a platform to secure payment processes and have it readily available to all your staff. I recommend doing monthly reconciliations. Some organizations do quarterly. I wouldn't recommend doing it past a quarter because the longer the history of the misappropriation continues, the harder it is to backtrack. So by someone other than your bookkeeper, have a monthly reconciliation, you know, at least quarterly. Embrace the secure digital donation platform that tracks everything, and enforce strict documentation for every transaction. This cuts losses by 50% in most cases. 50%. Can you imagine what you could do with 50%? Building a culture of accountability. Prevention starts at the top, meaning controls are powerful, but culture is stronger. Leadership must set the tone. Publish and enforce the code of ethics and have everyone disclose potential conflicts of interest every year. Have annual conflict of interest disclosure for board and staff. Put in place whistleblower hotlines managed by a third party. Do annual ethics and fraud prevention training. We discussed that in our last webinar of how don't take for granted what you taught Jane on day one on onboarding. She's going to remember the following year. So it's very important to do this annual training. Set up anonymous whistleblower lines identified by third-party management if possible. If not possible, make sure that you have a procedure in place where it can be anonymously reported. So that's because a lot of staff don't report things because they're scared of losing their jobs, especially if the staff is on the payroll for the organization. And ensure the board reviews financials every quarter. This kind of culture can reduce fraud by over 40%. Real world case studies, a lesson from the field. Let's look at this for a minute. A mid-sized nonprofit relied on a trusted bookkeeper to handle checks, bookkeeping, and reconciliations. Over a 4-year period, they embezzled $200,000. It only came to light because a staff member had reported or questioned the bookkeeper's new car and lifestyle. Could you imagine what your organization could do with the $200,000 that was embezzled in 4 years? I know for a small nonprofit, that could make the world of a difference. It resulted in legal action. The person lost their job. So that meant staff turnover. That meant more training, new hires. And unfortunately, they lost 2 major donors. So this is what we were talking about with building your reputation. If no one trusts you, they're not going to donate to you. 2 major donors, that could result in the closing of an organization in some cases. If there's no controls, no checks and balances, the damage can result in legal fees, prosecution, even to the organization, losing the loss of their exempt status, especially if it's not followed by the IRS guidelines. So action steps for your organization. Here's what we're going to talk about. Let's make this actionable. Review your internal controls immediately. Train all your staff and board on financial ethics and red flags, what to look for, how to report it. Implement or update the whistleblower policy, because again, like I said, a lot of people are scared to report things because they don't want to get in trouble. Again, schedule surprise or random internal audits by a third-party product is best, but if it's a larger organization, they could even have a team do it. Create your own internal audits. And then, of course, use the IRS Form 990 strategically to demonstrate transparency and governance, not just for compliance, but to show that your transparency and stewardship to the public. You can do this with your Tax 990 account. If you don't have one, you can create one today. So in conclusion, protecting your nonprofit's funds is not just about preventing theft. It's about preserving that trust and ensuring the transparency and sustaining your mission. Again, could you imagine that $200,000, what you could have done with that? And with the right controls and clear policies and a strong culture of accountability, misappropriation can be prevented. Every dollar safeguarded is a dollar that can go toward making a difference. So now we're going to open the floor up for some small Q&A. And remember that if we don't get to your question, don't worry, we'll reach out to you after the webinar via email. And if you need assistance getting your account set up, or if you have more questions than what we can cover about the Form 990 in this webinar, you can reach out to us via phone at 704-839-2321. We also have email support. You can just email us in a question to support@tax990.com. We also have live chat so that you can speak to a chat person if you're not wanting to call. So let's see if we have any questions. It looks like Anne has a question. So Anne is asking, what is the best time to put in place? Okay, I can't read all of it. Put in place a whistleblower program. If you're just beginning your nonprofit, I would put that in place along with setting up the nonprofit. Make that part of your, okay, I've got to go get my exempt status. I've got to do everything on the state level to get that. And go ahead and set up those guidelines. Go ahead and have those policies and procedures in place. Get a board in hand. Go over and review. A, B, C, D, this is what's going to happen. Again, I recommend having some type of ability to report it anonymously, because a lot of people are very fearful of losing their jobs or getting in trouble themselves. Could you imagine if you were told, well, why didn't you report it sooner? Well, I'm scared of losing my job. So if you do it anonymously, all of that is taken away. I would recommend doing it along with setting up, if you are already an organized organization for a nonprofit and you already have, some things in place, go ahead and update everything and get your whistleblower program. It could be a box at the canteen or at the front door that's, just, hey, how are we doing? It's just something where someone can report something, okay? It says inform donors of fraud. So yes, who I can't see the name attached to that question, but yes, this presumes that the donors are informed. Should you always inform the donors of fraud? Yes, you want to be very, very transparent when reporting fraud, because if you don't, and they find out that you were a victim of fraud and you were hiding it, you're going to possibly damage the reputation that you've built. It's very important to be very transparent to the IRS. You can report fraud with the IRS. We discussed that in my last webinar. There are certain forms that you can fill out to report it. So yes, I highly recommend being very transparent in all aspects. Okay, Jim looks like he has a question about the timing of reporting it. I highly recommend reporting it to the proper channels first and foremost. So if it's a fraud case or a theft, report it to the authorities. A lot of insurance companies require that police report, so make sure you get that. Take the proper measures. If it's a certain amount, I'm fairly positive that there will be charges brought against the individual. So you would need to be transparent in that as well, so that you're safeguarding your organization. So follow and then the IRS, report it via the IRS, and then report it to your donors. Okay. It looks like Tammy is asking, is coming in, just one moment. She's asking, okay, she's asking, is there repercussions for not notifying donors? Not that I am aware of, unless it's specifically in your bylaws. But again, you want to maintain that transparency, because that is the whole purpose of getting your exempt status and getting donors, because your Form 990 is supposed to be available to them, and you want to be as transparent in all fields as possible. So if you have questions about the legality of notifying donors, I would recommend reaching out to a legal counsel just to verify. Okay. Melissa's asking, how long does it typically take? I don't have a time frame on how long it typically takes to report fraud to the appropriate departments. I will again say the quicker the better. Cut that snake head off, okay? All right, it looks like that's all of our questions for the day. So we're gonna touch bases about a few things. Tax 990s put a lot of work into providing you info with the best resources, whether that's access to the IRS's guidelines, our knowledge base for quick answers to common related questions, to the filing process, form information, and filing requirements. You can also check out our YouTube channel and blog for helpful step-by-step instructions. And if you're going to be filing the Form 990 series or want to learn more about your filing requirements, you can visit our website at tax990.com. And as always, we're available Monday through Friday, 8:30 a.m. to 5:30 Eastern Time. However, we do close for lunch from 12 to 1, but we return all of our phone calls, so you can just leave us a voicemail. Our number is 704-839-2321. You can also reach out to support@tax990 via email, and then our chat, which is available during our same business hours. I want to thank everyone so much for joining me today. Again, if you have any questions, you can email them to us and we'll get in touch with you. If you have any questions on getting an account set up to get your Form 990 started, you can reach out to us and don't hesitate. We are here to help you the best we can, okay? Again, thank you and have a great day. Bye.